All right, ladies and gentlemen, it is time for the end of day post wave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from postwavetrading.com, home of the world famous post wave price trigger reports. All right, so we're going to start off with something from the request logs, and this first one here is Shop or Shopify. The ticker is SHOP. Hit a new weekly high today, and as you can see here, the market is in the green zone. So the bulls have the bias in the market right now. So because we are in a bear market, this constitutes as a bear market rally, and that started back here, and it is doing pretty well. Had a couple of pullbacks along the way, and then the market takes off like it's supposed to do. All right, so that's that one. Next up, we got, let's see, Aerojet. I think that's how you say it, Aerojet Dynamics. Let me go ahead and get that up there for you real quick. All right, so this one, the ticker is AJRD, and hit a new 52-week high yesterday, and then today is your inside day. It should be noted also that this is a bullish pointer that was made yesterday as well. So I think that the market has set itself up to take out the challenge and take out that high going into next week. We do need to talk about the gap up on October the 25th, though. We've got to talk about that gap that has not been reconciled yet. So at some point, the market will need to come down and test this. So where do we go from here? Well, tomorrow is going to be a key day to see where the market closes. Chances are the market's going to come down here next week and close this gap and then rally and take out the bullish pointer. So I think that's what this thing is looking like it's going to do. But I could be wrong. The market could just ignore this and just blast off to the sky and worry about taking care of this later on down the line. That is a possibility. We shall see. All right, I got to let you know this. All right, in case you weren't paying attention, the markets were in a perilous position where it was almost unavoidable that we were going to see a tremendous sell-off in most markets, not just the stock market. And yesterday, something happened, something I haven't seen happen in an extremely long time. I'm talking decades, uh, where the Fed began to speak. We had the Fed minutes to come out. And in this historic event, not only did the markets obviously like what he said, but he caused a rout in the market, an incredible bear squeeze. If you were short in the market going, prior to the announcement yesterday, you were on the right side of the market. However, when he began talking and answering questions, all of a sudden the markets, all of them exploded. Now, prior to his announcement, him talking, the Dow shorts had triggered that morning. All right. And the market was prepared and on its way down because that's what the indices were waiting for. We're waiting for the Dow to, break support. And it did that. And then all of a sudden, out of nowhere, the plunge protection team comes in. They knew what was happening. They knew that once that Dow tripped that intraday price inflection point circuit breaker, that it was going to be all she wrote. The bots were going to pile on. And I think that the releasing of this, this event in the afternoon is what changed everything. So immediately from that point, you had all of the stock indices turn on a dime and explode higher. And we're going to get into those charts in a moment. But this was a historic event Most of you, this was your first time ever seeing such a thing. I can't remember the last time I saw an event like that happen. Normally, these type of parabolic movements, they were always due to the Fed, but it was based on the FOMC coming out, that Wednesday at such time. But that's not what happened. We had a historic event happen. We already had FOMC the week prior on that Wednesday, but they set it up for Wednesday to make it seem like an official FOMC day, releasing the minutes on the Wednesday in the afternoon around the same time that the Fed would usually release the FOMC news to the media. And so in doing so, it caused the markets just to absolutely explode. And everything was tripped. Everything tripped. You had gold rallying, you had silver rallying, everything was exploding. Even bonds were rallying. The only thing that got smoked, and we'll see that here in a minute too, was the US dollar. And it got chopped to pieces today. Now, I warn you, the charts that we're going to look at, some of them may be difficult for some people to see, but facts are facts, and we have to deal with it. Now, this has been when I stayed up so late last night. That's why I was late doing my video. I was so exhausted, poring over the data, and I have to tell you, this was the greatest algo shift, greatest intraday algo shift I have ever seen. And again, it's linked to the Fed's doing. So we had the plunge protection team come out and totally can rescue the market and keep it from absolutely collapsing. So in doing so, now that the Fed is backstopping the market yet again, the printing presses are roaring, and it's all aimed at keeping the stock market elevated so that people will have some type of hope and something to hope to going into next year. But here's what's going to happen, folks. Now, I talked about this several months ago because that was the trajectory that the market was heading in. And then it changed. We had an algo shift. Now, what happened was we were starting to get news that the fourth quarter of 2022 was going to be very difficult because tens of thousands of jobs and layoffs were coming. Pretty much every Fortune 500 company was going to be laying off people. And you didn't really hear too many people talk about it. It was something that was known and hushed, and just ignored and swept under the rug, like, we'll see, right? So then the news starts coming out lately, in these earnings season, you're hearing all the companies laying people off and stuff, right? And then on the quiet tip, the Dow Jones trips the intraday circuit breaker yesterday with signals that the stock market is ready to fall. And just when it looked like everything was going to break loose, the Fed says, blah, 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 in his Fed speak way, saying, don't worry about the markets. I will protect them. I will protect your profits. And everyone and it's like every short in the world liquidated and got out of their short positions, added and went long the market, and everybody was singing Kumbaya. And they think, okay, the Fed has saved the day. They said that they're going to only ease and raise interest rates accordingly. They're not going to be too aggressive. They're gonna do whatever needs to be done to keep Wall Street happy, fat and happy. That's what the message was. All right. Prior to him talking, regardless of what people were saying, they were quietly getting ready to dump all of their shares on the market and then he comes in and he saves and rescues the day. So the algo shift that I talked about months ago, the original thesis was, okay, the market is going to rally to the end of the year and into January. And then in the first quarter of 2023, you heard me tell you that that's when I believe the wheels are going to fall off and the real ugliness of the economy was going to be revealed, and everyone was just going to dump. The theory sell in May and go away. They were going to start selling in February, March, and April and go away. And I think they know that. That's why they had to say what they had to say, because what was happening was, because of the layoff news, that was going to happen in an accelerated fashion. The major sell-off first quarter of 2023, that timeline was moved up to December, which is where we are now in. So somebody caught wind of the secret of the massive sell-off that was coming in December. And so that's why they said, okay, let's do the Fed minutes as a press conference. Normally, when they do Fed minutes, there's no press conference. The press conferences are saved for the FOMC day, not for minutes. When the minutes come out, all they do is talk about the minutes, and they talk about key things in the minutes. That's what all the business channels do, and then that's it. It is not a market moving event. Fed minutes are not a market moving event, not like the FOMC day. FOMC day historically has been a market moving event, but not Fed minutes. All right, because the Fed minutes are not going to reveal anything that was not talked about and testified before Congress when he does those testimonial FOMC days where they come out to tell you what the Fed decided, and then they hold a press conference, or he testifies before the Senate or whatever, Finance Committee, whatever. But this was different. He was paraded out there, and then they did something else. They set it up so that it looked like you were watching an episode of Oprah Winfrey when she has the celebrity set on the couch, and it's just her Oprah and the person on the couch talking. That's how they did it. Like it was just two dudes chilling over lunch, just shooting the breeze. Very relaxed, comfortable. Making it look very what's the word I'm looking for? Town hall type talk, or like a TED talk, or even, totally different. Something that you've really never seen before. All right. It is what it is. All right. So I had to break this down on what I saw and what I was seeing, and then what the algos were saying. So we have that taken off the table now. So now the accelerated timeline has now been moved back into its original position. So instead of everything being accelerated and the wheels coming off in December, they've pushed it into the first quarter of 2023. So we're back to, okay, they're going to rally, and then after January, that's when the wheels come off, and they don't care. And so we're back to that thesis now. So that's why you've been seeing all the weirdness happening over the last couple of days. Now, here looking at Chainlink, you have, not only do you now have a neutralizing force coming into play today, but you also have a crash alert for tonight into tomorrow's trading. All right, so this market has been neutralized and moving sideways forever, and now it looks it's going to be more of the same. One thing I've noticed too, that anything that you're trading that's just not moving, it's just dead weight, you can do a lot better finding something else to be involved in. All right, so here's your Litecoin. Litecoin overall has had a pretty controlled bear market rally. So the last 52-week low was made back in June, and the market has rallied since June from the $40 handle up to the $77 handle. And now we have a crash alert here for tonight and to tomorrow's trading as well. So it's a possibility the market could get close to 60 within the next few days, because that's where the top of the Kumo cloud is, and that's going to be your support. Then when you take a look at theta, theta's been consolidated for the longest. Look at this. This goes all the way back to May of this year. So you haven't gone anywhere since May of this year in theta. Just flatlined. All right, just flatlined. Nothing's happening. The market is just not trending. It hasn't It has not been trending since May. You've been in a sideways, forever sideways market. Taking a look at XRP Ripple, it's the same thing. No trend. The trend has not changed. You're still in a bear market, but it's not trending. It's just moving sideways with very tight trading ranges. That's XRP Ripple right there. Nothing is changing. But if you want to see some more interesting action, here is the euro. Now, since the dollar has been crashing, the euro has been rallying. All right, since the rally alert on September the 28th, the euro has had upward mobility, and it's on its way to try to get out of this bear market into a bull market. So it's on its way trying to turn this bear market rally into something. Now, as far as the euro has fallen, it should be noted that this rally is a little concerning for me, because from where it's broken to only be at the 105 handle, you would expect this market to have moved a lot more, than just getting from, par 95 to 105. Yeah, that's 10 handles, but if you look at the US dollar index, it has fallen thousands of pips. Thousands of pips. All right, thousands. All right. And the euro's only moved 10. So that's something to think about. So you get 1,000 pip move in the euro, but you get, like a 20,000, 30,000 pip move in the dollar. Just extraordinary. I mean, just in the last 3 months, the US dollar has fallen from the 114 handle. All right, 114 handle all the way down. All the way down, which is just incredible. So just something to think about when you're looking at this. All right, just a little concerned by it, just a little bit. The pound sterling is starting to consolidate too, by the way. You're still in the green zone. You're still under the bear market rally, but you're still in the bull market, and it hasn't really overcome as much either. Yeah, this is a bear market rally, and it's extending itself. We just hit a new weekly high, but I would have expected this to move a lot further as well than what it has. And it hasn't. It moved sideways for a couple of weeks. Look at this. All right. And then it finally said, okay, let's expand the range, move sideways some more. And then we finally break out this week. But this is due to Powell. This is due to the FOMC. All right. And as you can see, all the bullishness, all the buying that occurred yesterday that created a rally today. You see what I'm saying? You got to really do the knowledge to these markets, and you see what I'm saying. All right, now take a look at Bitcoin. Bitcoin has been consolidated for weeks under, and it still has not broken out of the consolidation zone. It's a wide zone. All right, you got right now 18,540 on the top, 14,965 on the bottom. So you got a 4,000 point sideways trading range that Bitcoin is moving in. All right, just something to think about. All right, taking a look at Ethereum, it's in the same boat. Just an incredible consolidation. The bars right here from November the 9th, and you're still not doing a whole lot. You're just moving and testing the higher and lower ends of the range. Taking a look at the US dollar, like we just finished talking about. Look at this. This is what I'm talking about. Look at this. So you got the crash alert that I gave you in the video on September the 28th. The market closed at 112.60. 104.69, and today you hit 104.74. Wouldn't you expect the euro to be a lot further? But I digress. So you're in free fall status, and you're creating the next leg down, and a lot of selling picked up yesterday under the Fed's interview. Taking a look at oil. Oil has been in the news a lot too. It's moving with the dollar on the downside. So you had your crash alert back here the week of June the 9th, and it's been all downhill for the oil. All downhill, right? The 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 bull market correction was right here. The correction went deep enough to turn into a bear market. You had the rally, you had the collapse, and then here you are now. The market's trying to get something going. It's trying to find a bottom. All right, so you bottomed out officially back here at the $76 handle on September the 27th, and then you do it here at the $73 handle on November the 28th. All right. So with that being said, you're already at the bottom of the Kumo cloud upside target in your oil from your rally alert from November the 28th. So the $85 handle would be the initial target for the upside move here in the crude oil. All right, that's where your resistance zone is. Okay. This is where I would expect the sellers to re-enter the market and then drive the prices back down again, unless this is going to be unless this is the beginning of a bona fide bear market rally run. If that's the case, then you're going to go back over $100 a barrel easy. But can't get ahead of ourselves. Right now, this is where we are. 85 is going to be the resistance zone going into next week for crude oil. Now, we've talked about gold. Let's look at gold. There's been a lot of talk about what gold is doing. And you got to keep in mind, gold has been in this bear market for quite a while. Now we have this bear market rally finally, and it's finally starting to take shape. We thought we were going to get something back here, all right, back during the month of September. And then we thought, okay, maybe it'll do it in October. But even though the bulls were holding on and keeping the market from, falling apart, it still hit a new 52-week low. And I think part of the problem was, you see this light blue line. This here is a neutral zone. This is a neutralizing indicator, and you can see that the market was neutralized during this time. All you did was move sideways. The market could not rally. All right, it just moved sideways, and in doing so, you hit a new 52-week low the week of October the 23rd. And then you hit another 52-week low in the week of November the 3rd. All right. But something happened on November the 3rd. It didn't happen in October, and that was a rally alert. And that marked the bottom. And then we've been off to the races ever since. So you've seen gold, run from the 1600 handle now back up over 1800 today with a new weekly high to boot. So the rally is real, but just remember, you're in a bear market. So this is a bear market rally. How high can the gold go? Well, to be quite truthful, it really doesn't have a ceiling. And part of the reason for that is because it never spent enough time at the older levels. Now look at this weekly chart. This is a bullish pointer from the week of March the 11th of this year. We hit a 52-week high of $2,072. That's your resistance point on the weekly chart. Guess what? Once you clear the Kumo cloud at the psychological 1900 barrier, the next stop is the 52-week high. That's the potential that gold has, because on the weekly chart, you're still in a bull market. You've had a very deep correction in a bull market as far as the weekly chart goes. So where is gold going? Kumo Cloud 1900 is the first upside initial target on this current run. So we're looking for another $100 to be squeezed out of this run, top side. Then the next target is the bullish pointer of March the 11th. All right. So that's what we're looking at with the potential for gold right now. All right. So it's wide open. Okay. Now, if you take a look at silver, all right, silver has been the weaker sister. All right. And it's trying to explode as well. So you hit a new weekly high here. It's wide open to the top, right? Let's see what the potential is for your silver. All right. On the weekly chart in silver, you are in a bull market. All right. That has had a very deep correction mixed with some extensive consolidation and neutralization of market prices. Okay. It's pretty much at the bottom of the Kumo cloud already. It's already there. All right. So you're flirting with it. All right. It's actually at $24.54. That's another $2 that you can squeeze out of silver before it hits the initial target. The next target, which is the top of the Kumo cloud, is at, I'm sorry, I said it backwards. $23.68 is the bottom of the Kumo cloud. $24.54 is the top of the Kumo cloud. Those are your immediate upside targets right now for silver. All right, on the weekly chart. Okay, on the weekly chart. Then you got to go back here. You got to go all the way back yonder for its target, which is at the 52-week high, the week of February the 5th of 2021 of $30.16. That will be the next upside target after the Kumo cloud is cleared. If that can be accomplished, then the next stop is the all-time highs, that $50 mark. So what am I saying? All things being equal, the 12-month forecast for both gold and silver is to take out the all-time highs in both gold and silver. All right? That is the long-term analysis over the next 12 months. You may want to write it down, all right, of where we're going in the metals. All right. Got to wrap this up. Let's take a look at bonds. Here's the TLT. This is bonds. Finally popped up above the Kumo cloud. All right. Just barely. And it hit a new 50, sorry, not 52, hit a new weekly high to do it. Now, as far as the bear market rally and the bonds are concerned, technically speaking, we've accomplished what we were looking for with upside initial targets. So where does the bond market go from here? Well, we close at 105.76. The next upside target is 120 for TLT, 120. And then from 120, the bottom of the Kumo cloud here is 125. The top of the cloud is 135. Then the next target after that is not until 155. And the next target from that is not until 180. All right. Those are your upside targets over the next 12 months for bonds, for the long bond, for TLT. All right. And our last chart of the evening, we're going to look at the Dow. Something I found that I wanted to show you guys that is a little uncanny. This is the Dow Jones. This is the DIA. The ticker is DIA, the diamonds, okay? Why do we have a crash alert for tomorrow's trading in the Dow. The Dow is signaling that this rally, this bear market rally that was really powerful is over. And now the market wants to sell off. It wants to fall down. That's crazy. All right. Now hold on to that image that I just showed you of the diamonds chart. All right. I want to show you guys something crazy real quick. Just give me a second. All right. This is the inverse ETF, the DXD. Why is both the DXD and the DIA in bear markets? How can that be? How is that even possible? Tell me, please. How? How? Here's your diamonds. All right. Here's the diamond chart. It's the Dow. And then here is the inverse Dow, the DXD. All right. I want you to see this. I'm going to put these charts side by side so you can see them. Because maybe this will open some people's eyes. When I say that the Fed manipulated the market with creating an incredible algo shift, that's exactly what I meant. The DXD, which is an inverse ETF, has been in a bear market. See bearish, see the grizzly bear? The DIA, which is the long ETF of the Dow, is also in a bear market. I say something's fishy here. How can you be in a bear market on your inverse ETF and a bear market on your main ETF, the DIA? I just want you to see that. But then it gets even weirder because now you have increasement of neutralization coming into the market. See the light blue line. Got a crash alert in the Dow for tomorrow with a light blue line, which is a neutralizing indicator. The same indicator is pointing for the inverse ETF, the DXD, and you have a rally alert here for tomorrow. What in the world? How is that even possible? That doesn't make any sense. That's telling you that this is a controlled environment. All right, controlled environment. Bear market, bear market. Just wanted y'all to see that you can't make this stuff up. All right, you can't make this stuff up. All right, now, I said it was the last chart, but I got to pull up the NASDAQ real quick. I got to let you see this one. All right, now here is the QQQ, the NASDAQ 100, right? Barely touching the top of the Kumo cloud. Barely. And we do not have a crash alert for this market. All right, hit a new weekly high. We're looking for this one to move higher. That's the NASDAQ 100. Why is the Dow giving a sell signal, but the NASDAQ is not? What about the Russell? Here's the Russell. The Russell is giving a crash alert and it's the top of the Kumo cloud, and it still has the red line. It's saying that despite yesterday's rally, the bears are still in control of the Russell. How in the world? How? Something is not right with what we are seeing here, ladies and gentlemen. All right, this is the last chart. S&P 500, the SPY is also giving a crash alert for tomorrow. Something is not right. This is the result of interfering with the markets. Whenever they do this, it has unintended consequences. So I just wanted to show you guys this tonight so that you can have a better understanding on We are looking at a war, a possibility of a war. The Fed says, nope, I will do whatever I can to make sure that the markets do not fall apart in December. But on the other flip side of things, why are we getting conflicting signals with the inverse ETFs and the regular long ETFs? That's not supposed to ever be. One is supposed to be bullish, the other one's supposed to be bearish. Obviously, if the market is in a bull market, it's been rallying, the inverse ETF is going to be in a bear market and falling off. They can't both be in bear markets at the same time. That doesn't make any sense. It makes no sense. All right. Okay, with that being said, folks, hopefully everyone will have a great weekend, relax, and all that good stuff, and be ready to take action. I don't know what tomorrow's going to bring. We'll be ready for anything. It is what it is. The reports are out. They've been updated. You can refresh your browser and take a look at your dashboard. And remember, smash the like button. And bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.